Okay, today is December 13, 2014. Hope everybody is enjoying the weekend. Right now, we're going to take a look at Apple. Right now, I have the weekly chart on Apple, and we want to see the price action here. Kind of review the price action between April to the present. We see that in April, we got this little run up, then it came down and pulled back, formed a little bit of a bull flag, then another run up until recently, a couple of weeks ago, then it started to pull back. And similarly, if we go back and take a look at back in 2012, we got this little run up here, which is pretty steep, and then pull back, form a little bit of a bull flag, and then ran it up again and form a evening star type of topping pattern. Then kind of sold off until it got down to April of 13, June 13, so forth, before it start to kind of stabilize. Right now, we're essentially watching Apple pulling back to see, is this a pullback, or it's going to be a little bit more than that. If it come down to this trend line and it doesn't get a bounce back up and break this trend line, essentially come back below this 103, then it could conceivably come down and test this 80 level, between 80 and 70 level here. So we got to watch out for that. And right now, we do not know, is this just a pullback or is it going to be a breakdown? So we just have to keep an eye on it. And if it pull back and hit that trend line, we'll need to see Apple come up and take out this old high and make a new all-time high there. And if we go and take a look at the daily chart here, we could see some of the level. Let me put those level back on. That we've been watching throughout the session. And here's some of the level that we've been watching, that 172. Let me zoom this back in to a little bit tighter time frame here. In this intraday chart here, we see this 172.20. And that's basically this top here, this peak here. And we're also saying that it has to get above this 117.45, essentially this pivot low. And after that, we want to see Apple get above this 119.25 here. Okay, and right now it's basically sitting in this 109 right now. Remember this flash crash day, this 111.27, this limit down day. It has to get back above that level and reclaim these previous high here, this 117.20. This is significant. The reason why this is significant is the only reason Apple stopped and halted at 111.27 on this particular day is because of the limit down rule that the exchange have imposed, to kind of giving a little bit of a resting period. It's like a circuit breaker for a stock that fall more than 5%, within a short period of time. And that's the only thing that it kind of prevented from keep on falling. Because the other thing is, if you know, if there is value in there, those value investors would have picked it up and run it back like no time. Right? And that's why it's significant. They didn't. So, and when it came back up, and I said that we will most likely see it come back down and retest that level, which it did. Then it also came down and broke it. So right now, we essentially are looking at that 109 and see if it could be able to hold this 109. If it can, then likely we will see it to maybe make itself back down to that 103, that 103 that we are talking about here, that this area here, this 103, 104. So this level here, 103.74. So the key is to hold this 109.79, and if we break through, can find support, the likelihood is we're going to see it come back down. And we test this 103.74, and if it can't hold that, then we're essentially looking at those 80 level there on the weekly. We're essentially looking at these levels here. Okay, for possible support. Okay, so that's Apple, and let's go and take a look at Facebook. Facebook actually been kind of strong relatively. It's been holding up this trend line here fairly well, and we're at the the level that we're keying off was this particular pivot high here, and this is the post-earning high on the previous one, not just the recent past one, okay, 2 earnings ago, and that's significant at 76, 74, and the first time it broke through it, got reclaimed that and formed a spinning top doji, then followed through with a some sort of an evening star type of pattern, similar to the topping pattern on Apple back in 2012. But the thing that's different with Facebook is it did not break down. It came down and held support on this trend line, and it's been holding it for a while. Then it's actually started moving away from it. Even during the flush day that we have on Wednesday of this week, it's moving up, and even on yesterday, on Friday, that the market is down, it actually have very strong relative strength, and it's actually moved up, and it broke to that 78.27 a couple times, but it wasn't able to close above that. We need to see it close above that 78.27, or at least move some distant away from that, because it need to see it to get back up above this peak, because there was a rejection up here when it got down here, rejected, and then we got a gap down, to form this evening star type of a pattern. There's significant that there's some seller coming in and it's sold it back down. So even though we kind of recoup and found some buyer, we need to see is there enough conviction from the buyer to actually push it back above this particular price. Then we want to see can it come back and fill this particular gap here, and if it could, then we could sort of look forward to see if Facebook could take out the previous closing high and make a new closing high. And then the other one is Twitter. Twitter is kind of weak, and it broke through this 38.50, and then we're looking forward to a hold above this 36.14. It held for one day. It held for a couple of days, even though right now it's still holding. And it still look kind of weak, although the MACD seems to have a little bit of a positive divergence here. If you compare this, the MACD here, in the price, so you can see there is some, some kind of positive divergence, which is encouraging. And if we could, get itself back above this 38.50, 38.60 level, then maybe work itself back up to this 43. It has to reclaim this 43 and get back above it. Otherwise, it just doesn't show that it has enough conviction to reverse the trend. Essentially, we're basically looking for a higher high, higher low type of a pattern to be formed in order for us to take a look at Twitter having change its current downtrend. Because if you look at here, it's still kind of trending under this particular trend line here. So even though it would break above this trend line, let's say up here, we really want to see it come up like this, right, to get above this particular pivot here, okay, and get a little distant away from this particular resistance level, and then maybe possibly go back and fill this gap and work its way back up to the the 56, 55 area. Okay, so that's basically the three stock. Just a quick review, and enjoy the rest of the week.